Alright, guys, so let's continue. Today is the day 5, or sorry, day 6 of this YouTube training. All right. We could not have a session yesterday because I was really caught up. Right, I had a lot of things to do and I could not make it. All right, so today we're going to continue. All right, so that means this training will be ending on the 31st. Right, so to end on the 31st instead of 30th. So I will try as much as possible to make it till the 31st. Right, so we don't cross over to November. Right. So last time we convened, I talked about liquidity from the previous candle perspective. Talked about previous daily liquidity and all of this fun stuff, right? So the same thing applies to daily, applies to 4 hour, applies to monthly, applies to 3 months, yearly, and all of this fun stuff, right? So that's by the way. So now we also have all those stuffs. Let me check if I can see yearly time frame here. All right, let me check the 12 months will work. All right, so you can see how even the 1 year time frame occurs. You can see it that when price was about to this from January 2006. So when price was about to dump, you can see how price pushed above this and then dropped. And you can see this heavy drop. You can see as price was about to continue its sales. Right, look at what happened there. You can see how price came, took out this, and then what dropped. Before price continued to sell, you can see what happened. It happened, took out this, and then you can see how it continued dropping. When it dropped below it, now before it continued another to drop, it took out this one. So before price actually goes down, right, it usually does this kind of stuff. Now, if you ask me, right, before this sell will continue, it's very likely that price would go for the high of this candle. So I'm kind of bullish on GPUSD on the longer time frame perspective, right? So it's very likely that price will go for this high. Why? Because I'm not considering this candle. Why? Because this candle is an inside buy. I told you guys that whenever you see a candle inside a candle, what's an inside buy candle? If you have two candles now, you have candle one and then you have candle two. Once a candle is inside a bigger candle, we call it an inside back candle. And this smaller candle does not really have much, it doesn't really have much relevance. So we like to use a candle that have a range that are outside, right? We want to use the bold candles. As long as this candle is inside this candle, we don't consider this candle. We call it an inside back candle. Right? The only time we consider the candle is when it goes either below, right? It goes below the previous candle or it goes above the previous candle. So as long as price does not go above or below the previous candle, we call it an inside back candle. So we don't use that candle for anything, even imbalance. We don't use that candle to measure anything, right? So this is an inside back candle because this candle is inside this one. So we're not going to use this candle because it's an inside back candle, right? So we are going to use this one instead because this is a bigger candle that has a high and a low, right? You can see this candle went below the low of this candle. So for us to continue our sell, we want to see price take our liquidity to fuel what our sales, right? So from the monthly time frame, I feel that GPUSD is going to go for this high before we will see what a sell continuation, right? So we'll have to see GPUSD go above this high, right? Taking our liquidity, and then we can now see price begin to go to the downside. Right. So now let's talk about session liquidity. So this thing happens all the time. So let's talk about session liquidity. Right. So let's talk about session liquidity. Right. So for session liquidity, this refers to sessions, right? Now you already know what I mean. So typically, when it comes to session liquidity, you're looking at 3 sessions, right? Or for me personally, I only use London and New York, right? So New York, those are the two time frames I use. Well, this is sessions order. All right, so sorry. Okay. All right, so let's look at session liquidity. All right, so session liquidity, London and New York. So now for me personally, this is how I use it. Now, well, we have three sessions, right? We have Asian, we have three sessions, right? We have the Asian session, we have the London, and then we have the New York session, right? So for me, I personally look at London and New York. Now, what do I mean by this? Now, let's assume that we're inside the New York session now. Let's say we're inside the Asian session, right? So inside the Asian session now, maybe surprise move, move up, move down, move up, move down. So now we now have what? So we're now entering into what? London. So now, inside this London session now, we're inside London now, right? So this is London. So I think I may make London color different, right? Maybe I'll make it let's say blue. Go back. Let me make the color blue. So now we're inside London session now, right? So now when we enter into London session, what happens? What happens is that this high that was formed in Asia becomes what? Asian liquidity, right? Or Asian session liquidity. You can call it ASL. So Asian session liquidity, the high and the low, right? All these highs are formed in London and becomes what? So all these lines are formed in what? Asia becomes what we call Asian liquidity, right? So we have all this in Asia. This now becomes Asian liquidity. So remember what I told you guys that for price to go down, I want to see price take out. So market will likely do something like this: take out this one and possibly what push above this London liquidity or Asian liquidity before they want drop it. So now, well, I like to see this happen. Well, when in the London session, I like to see price take out Asian liquidity because what I told you guys when market is about to move, it takes liquidity before moving to the opposite direction. You can see how this guy was about to buy. You can see how he took a liquidity before he was pushing above. Right? When this guy was about to drop, you can see how price took out this high before they were dropping. So price taking a liquidity is usually a fuel for a market to move, right? So when price does liquidity, it is a fuel for price to continue in that direction, right? So Asian take out London, and then we'll see what price drop, right? So what happens next? Now we now see London form is high and it's low, and something of that sort, right? So now let's assume now this is London. Remember, this is London, right? So this is London. So we have seen how London behaves. So this is London. Now let's assume that now we're not entering into New York session, right? Now we are not entering the New York session. Now we're not entering into New York, right? This is New York now, and that session now, right? So this is New York session, and this session is red. So we're not entering into New York session. Okay, now we're in New York session. Now, what do we expect? We want price to also take out what? London liquidity, because each time we enter into a new session, we expect price to run the liquidity of the previous session, right? We expect price to run the liquidity of the previous session for us to, continue our move. Now, let's assume in this case now, price does what? Comes and takes out this low, takes out London low, and then maybe gives us a bullish confirmation, right? That means this market is likely to buy. So now in this case, we took our London high. And where did we go for? We go for what? Asian liquidity low. So we took out Asian high and I started pushing what for the Asian low. This or this low. Now in this case, market is looking bullish. So price took out London liquidity low first, and then that's a bullish break of structure or change of character. And then what do we expect? It's very obvious that price would want to take out what all these London highs. We have London high here. We have London high here. Then we have what? The extreme London high up here. So it's very logical that price would want to do what? Would want to now start to seek what? London liquidity. So take out this high, take out that high, then we blast through this one, and then blast through this one, and then we finally blast through this last one. So whenever you have a bullish bias and you see price take out London session liquidity, that may be a fuel for price to push in the opposite direction, right? It may be a fuel for price to push in the opposite direction, right? That's what I mean. So whenever you see price do that stuff, right? It's really a fuel for price to push in that opposing direction, right? In the opposing direction. So this is what we expect. Whenever you see price take a liquidity from London or Asia, you confirm from the trend or from the high time frame that price might want to go bullish. So now you see price do this. This is a sign that market might want to go the opposite direction, right? So this is how we use session liquidity. All right, this is how we use session liquidity. All right, so this is it. So it's nothing more different from this. So now the thing occurs on for Asia, Asia will not continue like this. So I usually like to look at it from London and New York. So London and New York are where I look for these opportunities of liquidity taken. I don't trade Asian session. So if you trade Asian session, obviously you have to be using that. If you trade Asia, that means you'll be using the low and high of New York, because after New York comes Asia. So you're going to have Asia again somewhere around there. So Asia is going to likely come again. So in this case now, if you are even be trade Asian session, you're going to wait for price to do this, take out New York liquidity and give you what a confirmation to do what to go the opposite direction, right? That's how we use it, right? So use when price take it out, you learn for price to go the opposite direction, and you target what the highs from the previous session for your profit targets, right? That's how you use Asian liquidity, right? So let's see if we can look at just few examples. Today, when it may not be a very long day, we might just be making it very brief. Right, so now let me bring in this tool. It has to know Asia. So this is the 30-minute time frame. Right, so let's see. All right, so what do we have here? All right, so what do we have here? So this red line signifies New York. This red line is an indicator. This red line signifies New York. The blue signifies London, and then this box signifies Asia, right? So now, what do we do? Now, market was heavy bullish, and then we were kind of expecting market to drop down because we're in a bearish range. So market was kind of drop down because we're in a bearish structure. Now, although we didn't have anything in London because price needed to go up, we didn't have anything in London. But look at what New York did here. Look at this. So where did New York session begin? Right? New York session begins by 8 a.m. New York time. So let's look for 8 a.m. New York time here. So where's 8 a.m. here? Yeah. So can you see this is 8 a.m. candle? Can you see what happened there? That means all this high that formed there, this high formed in what? New York, right? This high formed in London because this is 8 a.m. candle. So 8 a.m. New York time is when London session ends and New York session begins. Or let's say they overlap because London and New York usually overlap. So when we have this is the New York candle. This is the first New York candle. Can you see what happened there? You may see we had the New York candle. What happened? Market did what? Ran London high, and then we can see market reversed. So that's what I'm talking about. When you enter a new session, you like to see this kind of things occur because it's usually a sign that price would. This was NFP though. Consider price this ran above, and then the NFP candle happened. All right. So this is how this thing happens. Now, can you see how we are now having Asian liquidity build? Now, for you to really trust this particular sell to continue, you want to see price go above this London high or this new Asian liquidity. So that means you would like to see price take out this before they will give you what they sell. So always wait for price to take out liquidity before going the opposite direction, right? It's one of the secrets I use when I'm trading. I like to see price take out what previous session liquidity. Let's look at a very backdated example. All right, so look at this. What happened there? So can you see in this example here, market wanted to go above, right? You can see how price is what to run what the Asian low in London session. This is London session beginning. Is it? This is London session here. You can see how price ran it in London. And what happened? Market started buying what to take out Asian high. Now let's look at New York. New York started somewhere around there, right? Although New York didn't really do much, right? But London was a very clear example. So I want to see where the market will give a very good example again because these things do not happen every day, right? Your job is to wait for the days the market gives those that clear move, right? That clear move, right? That's your job. Wait for the market gives those clear move, right? That the clear move to go ahead. So look at this one here. Price did not take out Asia. Instead, just pushed above. Then this was just an example of a day where the market did not really give what we want to see, right? So the market just did its own thing, right? So there was no real clear liquidity graph, right? But remember, I told you guys that we don't that it's not only session liquidity that we use. We also use previous day, previous 4 hours. So in case where maybe you didn't see anything on the session, you can look at the daily time frame. Okay, what if the daily, the data thing we like to see, the market take out the previous daily high, right? So it's in cases where you can't really see session liquidity, you can now go back and look for what the first one I taught you, which is what daily liquidity. Or if you don't see daily liquidity, you can look at what I talked about internal and external. So those are the three kind of liquidity you're looking at. So if price doesn't do what you want to see, like that, look at the example here. Market took out what? This Asian low. You can see how market bought after taking out Asian low. Right? This is a very good example. Right? Look at this one now. So as market did that, now look at this is a New York candle. Right? This is New York candle here. So watch this. As we start the New York, so what happened? Price now pushed above what? This high. And then what happened? We now saw a drop off. So in this first case, this was London candle, 8 o'clock London time. So you can see how we're using 8 o'clock. This was sorry, this was London. Let's see, as London opened, London ran up below, taking out all this liquidity that was formed, and then now pushed above. Now what happened? During New York, you know, there was now finally pushed above this high. As pushed above this high, this was this Asian high, market started with dropping again. So that's how you actually view the market, right? So price has to do all those stuffs. And of course, you can see that this is a you can see this high here. You can see how price pushed above all these highs, right? Market really did nicely, right? So, like I said, in conclusion, when you're using liquidity, you have to be very, very flexible because sometimes you might not see liquidity on session, right? You can be using the daily liquidity. You might not see on daily, you can be using 4 hour. You might not see on 4 hour, you might see it on the internal and external standpoint. So sometimes liquidity grab may not be on the particular part you're looking at. So you have to look at the three angles. You look at the daily perspective, as market taking at the daily low. You look at the 4 hour perspective, as market taking at 4 hour low high. Look at session perspective, as price taking at London Asian. You look at the internal and external liquidity, has price taken out external liquidity, has taken out internal liquidity. So you look at those three angles, right? That's why you always have to be on the chart and grinding it out because sometimes the market can be very, very subtle. So you have to look at all these angles. Which one is there? Which one is can I see? Like now, I'm looking at this guy now. What am I seeing here? I'm seeing that price has got what? Below Asian what? This Asian price has gone below Asian low. So that means there may be a push up. That means that it's possible. I'm not saying that it will happen. Also, the price might do something like this in the future, maybe today. Maybe take out this Asian high and then that give us what a final sell to the downside, right? It's very possible because this Asian high is still intact. Now, the reason why I won't buy this market is because we're in a bearish range, right? I won't buy this market. Why? Because we're in a bearish range. So you can see our swing higher and our swing low. So I won't be looking to buy this yet until price changes bullish. So in this kind of example, I would not do anything, but I won't do anything until I see price give me that sell move. So if you want to buy this, you're taking a very big risk because market is in a bearish range. So for me, since it's a 30 minutes time frame, I would like to see price resume being bearish. I mean, also see price take out this Asian high and then give me what a sell confirmation to do to go lower, right? So that is it. So there's also one last liquidity. Oh my God, there are two. I don't think I'm addressing this two, right? There's one there are two other liquidity, right? That has to do with the daily that has to do with midnight candle open. So I may not talk about it now. Maybe towards the end of this boot camp, when I'm talking about power of three, I'll kind of chip it in. These are some topics that I may not really be addressing so much because of the depth of it, right? So I'll just be kind of touching it in this session, right? So that is basically what I have for you today. So if you have not subscribed to the channel, please do to subscribe. It helps our videos, it shows support when you subscribe to the channel. Also, like this video, share with your friends, and I will see you guys in the next video, which is coming up tomorrow. So have a wonderful day. Cheers and God bless.